Happy April 2nd, everyone. We're dealing with very dangerous markets, traders. We're dealing with overextended bullish rally, with extremely tired buyers, and with worthless sellers. So, this is day trading chart on S&P, 1-minute chart that's showing you how crucial Fibonacci resistance is. This is very dangerous bullish pullbacks that's showing you as long as this key Fibonacci resistance respected, buyers are worthless. This is exact same key Fibonacci resistance. That's the most important level that will be tested very shortly on weekly chart, where price collapsed from in 2018 twice. This is a reminder. This level, 2900 level, traders, institutional chart, institutional resistance, where market sold off from 2018 twice. The response at this level is crucial. If S&P is going to sell off, as it did in 2018, no surprise. However, what do we know very clearly right now? Institutional bias firmly bullish. If little junky charts not giving us selling pressure, it's not a good news. Exact same identical level in front of you this morning, as played out on weekly for years. So, this is what S&P looked like a year ago when market was selling off. This was key support on S&P, famous 2600 number. Do you remember this level to the downside? Exact same bright pink line, crucial Fibonacci support. S&P is frozen at this level, 2600 lifeline on S&P. This level respected for a year. Finally, S&P making more effort to break through. And when this level is out, S&P selling off until Fibonacci reversal zone. All identified in advance, never after the fact. So, this is S&P last year, frozen at exact same support. This is S&P right now, exact same resistance. Identical level. Nothing else is possible. If S&P will remain in this major chop, market in a whole a lot of pain. To the downside, S&P was froze at this level for a year. So, where's the selling pressure coming from? This area. This is a support that was respected for a year. This is where market rallied from. Bullish rally overextended. Pullbacks are worthless. Only this is possible this morning. Nothing else in a play. When institutions doing nothing, markets become extremely dangerous. If we're stuck in such worthless job for hours and days. This key Fibonacci resistance, what was present on Apple for a year. Do you remember 181 on Apple? Identical level on S&P right now. Took Apple many months to break through. After earnings, Apple skyrockets and reaches Fibonacci reversal zone, where Apple starts selling off. What do you see at the bottom? 140. Did Apple sold off? Of course. Did Apple rally from reversal zone? Absolutely. This is Apple now. What is the lesson? Do not buy at reversal zone. Do not short into trend inception. No need to wait for months and years to see the power of the method and why hedge fund managers in the course. You see it instantly in live markets every single day. Identical level, a problem on S&P this morning. As on weekly, as on Apple, as on any instrument you trade. Nothing else is possible. So here we go, traders. Price will test this level second time around. Nothing else is possible. If price blasting through, institutions picking up this steam, adding to their positions. This is a huge, huge day trading obstacle. This is the end of the minor trend. If this level remains respected, it shows bullish weakness. This is exact same level in a play right now on multiple instruments. Here is a reminder. Here is Netflix. Poor Netflix. Spectacular earnings don't mean a thing. Fibonacci levels mean everything. Spectacular earnings at the start of this year. Spectacular earnings. Netflix sells off between the end of the minor trend, key resistance and key support, as you saw on Apple and you saw on S&P. What's the problem? This resistance, big problem. Just like on 1 minute chart this morning. Price action remains the same, the only difference, risk management and trade hold time. Bullish weakness remains, market in a whole a lot of pain. How you adjust to these market conditions will determine everything in your trading. Lessons on Netflix, lessons on Apple. Spectacular earnings don't mean a thing. Fibonacci means everything. Lessons on Netflix. 3 times Netflix comes out with spectacular earnings. 3 times Netflix crushes. And this is this year. Key support respected, buyers step in. Key resistance respected, sellers step in. Netflix adding millions of subscribers does not mean a thing. And this is S&P this morning. Trader who understands that buyers are exhausted, taking a lot of time right now. Trader who understands that this is some of the most challenging conditions on years because bullish rally overextended and institutions doing nothing, spending very little time in front of the screen. Trader who spends a lot of time in front of the screen and buys with institutions at institutional trend inception at the end of January in excellent shape. And this is the key. Ultimate support, buy with institutions. Time and time again. Last week, stunning opportunities. Multiple times in European session. Not this morning. Bullish rally overextended market in pain. This is a major obstacle. To the tick remains. Just like on daily, just like on Netflix, just like on Apple, just like on any instrument you trade, you do not need anything else. All you need is knowledge of price action. If buyers picking up this steam and this level is out, no one's surprised. Institutional buyers remains firmly bullish. We've been here for an hour. Key moment on S&P traders. Will S&P do exact same thing as Apple had done? More than likely. Crucial level on S&P this morning. We dealt with a whole lot of junk. We dealt with a whole lot of pain. We dealt with a whole lot of bullish corrections. This level is out, bullish rally with skyrocket. Next to here and then to here. Nothing else is possible this morning. And that's the power of Fibonacci. No indicator on the planet will give you. Only knowledge of price action and Fibonacci will. This was exact same dance on Microsoft last year, 2018, ultimate brick wall. Microsoft, buyers stepped in from Fibonacci reversal zone, and right now, finally, after respecting key resistance for a year, Microsoft at drastically higher level. Will S&P do the same? Or will it continue being stuck here? Here are Chevron traders. Exact same identical level is a problem, 2018. And this is S&P remains. Nothing else is possible. Only this. If you buy with institutions at trend inception, at key Fibonacci support, and you spend in front of the screen very little time nowadays, you are a brilliant trader. Knowledgeable trader plans vacations around institutional volume, around institutional trend inception, not now. We are at overextended bullish rally with institutions doing nothing. Market will test you to the core of your knowledge of price action. This is when accounts get blown up time and time again. This is the most important moment in your trading. When trade very little, when spend very little time. If we're not having spectacular bearish pullbacks, if we're not having institutional selling pressure, markets will become worse, not better. Nothing else is possible, only this. Every single day for hours and hours. Price will crash and sell off. It's a gift. Until then, exhausted buyers remain. Worthless sellers not present. And that's a dance every day. You must respect and obey. Rules are met, take a trade. Apply Fibonacci levels. Rules are not met, do not touch the market. Do not ever speculate. So here we go, traders. Third time around, will price skyrocket finally, just like Apple had done, or will this remain brick wall? Ultimate accuracy, ultimate precision. Pure price for entry and Fibonacci for exits. And this level is everything this morning. Nothing else is possible. Only this. This level is a killer. Brad knows that. Nothing else is possible. Only this. Here we go. Fourth time around. Price at this level. Nothing else is possible. Boom. Pain and torture at key Fibonacci resistance for over an hour. Price is doing exact same thing as Apple had done. Crawling higher. What a market, what a dance. Only knowledge of price action, only proper use of Fibonacci strategies and Fibonacci tool will keep trader out of trouble, no matter what you trade. So here we are, traders, hour and a half after market open. Nothing else is possible. This Fibonacci level will always keep you out of trouble. Knowledge of price action, no matter what you trade, will always keep you on the right side of the market. If we're not going to see powerful institutional pullback, markets will become more dangerous. But if you will master price action and Fibonacci, the sky's the limit. You will trade with ultimate accuracy, ultimate precision, and you will spend very little time in front of the screen. And most importantly, you will stop losing money. You know where this level is? You know and understand institutional levels. You know and understand where to place your trade, where your stop, where your target is. You understand that buyers remain fully in charge. You never, ever, ever trade against institutions. Here comes this level again, and again, and again, and again. Nothing else is possible. Only this. Pure price for entry and Fibonacci for exits. Choice is yours. What you decide to trade.